to have you on, and you reiterated your call for a mild recession. Walk me through why you continue to be confident that that will be the case.
Right. So, we've been kind of projecting a mild recession or like conditions for the first half of 23, actually since the middle part of last year. We felt that the Fed rate hike trajectory was ultimately going to impact the production side of the economy, which you're seeing now, and whether it's industrial production, a lot of the related production metrics, you're seeing it in the leading indicators data. We had been seeing it in consumer stabilized. But, I'd say all told, we think that if you look at some of these traditional macro metrics, the U.S. economy should be tracking along something akin to a recession-like condition in the first half of the year. And what's happened most recently with the banks, we think probably puts a little bit more of an onus on the credit conditions element, which should continue to show some tightening.
Okay, I want to dig into that a little bit more, but first, joining the conversation as well is Sumit Handa of Pennington Partners, who is here on set. Welcome. You would take the other side of this debate, I think, because you're constructive right now on markets, and you don't necessarily think that a recession is upon us.
I would say that, and thank you, by the way, for having me. It's a privilege to be here, and nice to meet you, Scott, as well. With respect to the state of the world, obviously things are not pleasant this week. It's been a very challenging week. But with that said, we've had a decline in oil from $120 to essentially $70 today from where it was when Ukraine happened. That's very bullish for the consumer, right? Those of us who don't drive Teslas and and actually have to fill up our gas tank, last year it was around $80 a gallon. Now it's $80 to fill your car. Today it's closer to about $50. So that $30 is an enormous savings. It goes right to the bottom line. We saw that in the retail numbers that came out just on Monday or the day before. Obviously, that's nominal numbers, not adjusted for inflation. But obviously, I do remain constructive. I also remain constructive because China has opened up, and so China is the world's largest trading partner in the world. They were closed. COVID happened. They injected $1 trillion. A tsunami of liquidity came into the world, more than offsetting the Federal Reserve's actions, along with the Bank of Japan, who is continuing to engage in their sort of YCC or twist, if you will.
Okay.
So all of these reasons are why I remain optimistic in the near term.
Okay, so Scott, if we do get a recession, you're saying your base case is for it to be mild, but if it's not, right? If it's not, what do you expect the triggers to be of a worst case scenario?
So the triggers very simply would be a combination of economic data continuing to show deceleration. At the same time, the Fed continues to lean into its rate policy in the quest towards being able to see a 2% CPI. The combination of those essentially accentuates the issue that you're already seeing in the macros and would trigger something that we would kind of characterize as a more severe recession. We place low odds on that. We're 15% probability. But it's certainly something that needs to come into the discussion as we wade through the banks over the past week, and combination of Fed actions coming up, as well as some of the collective efforts to ensure that the safety nets around the banks are in good shape.
So, Sumit, did you shift your outlook on the likelihood of a recession over the past week with all the bank action?
Well,
we haven't yet, but we've certainly been thinking about it.
That one was for Sumit.
Sorry, Scott. Zeus and Athena, Jay Powell and Janet Yellen came down from Mount Olympus to save the banking system, and so over the last week, they have guaranteed $9 trillion of uninsured deposits in the United States. The two banks in particular, SVB and Signature, that filed on Monday, they were about 1% of the U.S. 1% of the U.S. banking system's assets. So if we look at the banking system, it has $30 trillion of assets. The two combined assets for SVB and Signature are about $300 billion.
Right.
So in the scheme of things, while it certainly is a problem, it's a virus, but it's not something that the doctor acted very quickly to correct and provide a solution. Right. With that said, another $2 trillion of liquidity has come into the world because of the actions taken by the governments. And so again, there's a double helix when it comes to the world. It's not just fundamentals; it's also liquidity. and liquidity is coming in to the system.